So I've been going through my TikTok, right? And I've been hearing this thing where people are paying 7,000 for like a Renault Quid or a Kia Picanto, like your small entry level cars. And I was just like, kanjani, because I know like things are very expensive, but then there is no way that you can pay 7,000 rand for a Picanto or a Renault Quid. But anyway, today I'll be talking about the different financing options for your vehicle and how you actually what inflates your installment or what the dealership or the salespeople actually add onto your installment for it to potentially maybe get to 7,000 for a Renault Quid. So, hello guys, my name is Mpompa Pudi, also known as the Modern Financial Advisor. And like I said, today we'll be talking about financing options for your vehicle. So, let's get into it. So, let's start with the first traditional financing option, right? Where you go to a dealership and you pick the car that you want, and then the dealership applies for financing on your behalf and they submit your application to all the major banks, right? And obviously, they'll present the best quotes and you will pick and choose whichever you want because every bank is going to give you a different rate, different interest rates, and just like a different structure. I remember when I was buying my car, I think I had, I think was it West Bank and MFC, and West Bank wanted me to pay a deposit towards the car. They were giving a very good interest rate at the time, but then because I didn't have a deposit for the car, I opted for the other financing option, which had a slightly higher interest rate, but then because they didn't need a deposit from me, I then went for that option because I didn't have money for a deposit, guys. My purchase was like emergency purchase because I needed to get the car quickly for my job. My job requires me to have a car, so I was like, doing a deposit fresh from an internship. Like, for me deposits, kanjani. Anyway, so those are the options that now they can present to you, and you can actually take those options. For those of you who have bankers, you can go and talk to your banker, and then they can try and get you the best interest rates, and you will just choose whichever bank you feel comfortable working with. And once that is done, your installment is determined by your interest rate. Let's just start there because I know, like, we see ads, you'll see a vehicle ad saying pay 3,500 as an installment towards this car, but that is subject to your credit rating, that is subject to the interest rate that the banks charge you. So that 3,500 that you see on the advert is like, it's just a guideline or an average of what you could pay, and that's probably calculated on like the prime rate and based on like a good credit rating. And most of the time they would say you'd have to pay maybe a 30% deposit towards the vehicle. So if you don't have a deposit, obviously you're not going to be paying the 3,500, right? So what then adds on to your installment is obviously the salespeople at the dealership have products to sell. You've got your maintenance plans, you've got your service plans, you've got your what do they call this one? It's a maintenance plan, it's a service plan, and a warranty plan. So if you're buying a brand new vehicle, let's say you're buying a brand new Renault Quid, and Renault says they're going to give you a free service plan for 3 years or for a certain number of kilometers, and you'll get that service plan and you'll get maybe a warranty plan. Most of them will give you a free service plan and a warranty plan, and maybe they'll sell you a maintenance plan. So a maintenance plan, the installment towards that maintenance plan gets incorporated into your car installment. So they can say, okay, I remember when I was buying my car, they gave me an option to add a maintenance plan, but I was like, not now, because sometimes we don't opt for these things until we actually need them. So I opted out of the maintenance plan. So when you buy your car, get a breakdown of what your installment actually consists of, because you could have a service plan. If you're buying a car that's like a pre-owned car or a demo car, let's say you're buying a 2022 model vehicle, right? And we in 2024, and you only have like a year, if it's got like 1 year or a 3 year warranty rather, sorry, you only get like that 1 year warranty plan when you buy that vehicle, because it was manufactured in 2022, and the warranty actually goes from the time that the vehicle was manufactured. So the 3 years doesn't start when you buy the car, it starts when the car was actually manufactured. So if you're gonna come in 2024 and then you buy that vehicle, you already have just 1 year left of that warranty plan, right? So they can say that, okay, you need an extended warranty, this is how much it's going to cost you, and they add that onto your installment, right? So remember, it's your interest rate, it's your maintenance plan, and it's warranty plan. With the service plan, you have an option of taking out a service plan with a dealership that can also add on to your car installment, or you can say that what, you will pay for your service upfront. Also depending on the car that you're driving, because I can imagine a service for a BMW, if you have to pay for that cash, it's going to be quite steep. So those are the costs that they can add onto your car installment. So let's just recap. It's your car installment, your interest rate, the warranty plans, your service plan, and the maintenance plan. So what the bank can then do is, and I remember this when I got my car as well, the bank can then say they're giving you a credit shortfall cover, because remember, if your car is financed, you need to repay the bank, and they'll say that, okay, if your car gets involved in an accident and then it gets written off, they give you that credit shortfall cover. So the credit shortfall cover is to cover that difference between the retail value of the car when the car gets written off, and the difference that you're still owing to the bank, especially the interest difference, because the insurance company will only pay what the car is worth, or the value of the car, or rather the insured value in insurance terms. And you'll still have this difference that you need to pay back to the bank, the interest that you need to pay back to the bank. So you must check that. And you can take a credit shortfall cover either through the bank or through your insurance company. It just depends, because I remember when I took my car, I think for the first 3 months, my installment was different from what we had agreed on. And when I called the bank was like, no, you've got credit shortfall cover on your installment. I was like, oh, okay. Actually didn't know that. And I had took a credit shortfall cover with the insurance company. So I was paying credit shortfall twice, on the insurance policy and on the car installment. So I then canceled that with the bank, and then my installment went back to what I actually know it to be. So please, guys, when you buy your vehicles, do check that quote. The cost breakdown of what your installment consists of. And when it comes to interest rates, I know when you're buying a car, especially, when I got my car, I had a very high interest rate because I was fresh from an internship. My credit score wasn't looking that good, because I hadn't built enough credit record at that time. So my interest rate was very high, and that was before we had like all these interest rate hikes. I think it was close to 14%, and I couldn't negotiate that at the time because I didn't have like a negotiating leg to stand on. But when I improved my credit score, I went back to the bank and I renegotiated my interest rate, and they, I had to print out my TransUnion thing and send it to them. They went and checked. My credit score was very good, and they reduced my interest rate. So even when you take a car with a balloon payment, because when I took my car, I had a balloon payment because I don't want to say I didn't afford the car, but then like I really, really needed the car, and I just had to take whatever that was presented to me at the time. So remember that you can negotiate your interest rate. You can negotiate whether or not you want to have a balloon payment for your vehicle, because another thing that sellers don't tell you, they'll say that they'll advertise this car and say you're going to pay 3,500 towards let's say an SUV or a mini SUV. And when you look at the T's and C's, and you don't read the T's and C's because you just want to take your car and leave. So when you look at the T's and C's, they'll say there's a 40% balloon payment and there's a deposit that you need to pay. So if you don't want a balloon payment, you can tell them that, listen, I don't want a balloon payment. And when you dissolve your balloon payment, that's obviously going to increase your installment. So if you want to go for the balloon payment, it's going to lower your installment, but then just know that at the end of that 60 or 72 months term where you pay off your car, you still need to, if you have the money for the balloon payment at the time, you can just pay that balloon payment cash, Or if you don't have the money, you're going to refinance that and you're going to pay more interest on the refinancing of the balloon payment. So do check that. So when I went back to the bank to renegotiate my interest rate, I then asked to dissolve my balloon payment because my installment was, guys, I drive a Kia Picanto. So my installment was 2.4 at that time. And I was like, yeah, I can actually afford to dissolve my balloon payment. And if they give me a lower interest rate, I think my installment only increased by around 800, and then I then increased my installment further so that I can finish paying off my car quicker. So you can go back, it can be undone, guys. So whatever deal that they give you at the dealership at that time, you can renegotiate it. If Bank A says they're giving you 12% interest rate and Bank B says they're giving you 12.5, you can go to those banks and try and negotiate further. And if they can't give you, you know, a lower interest rate, then it's fine. But like, go with the best option. And yeah. And number two is we have the in-house financing, right, from the dealership. And this is mostly on like your luxury vehicles where it's in-house financing, and then they also have these lease options for a car, right? So how the lease options actually work is you go to, let me make an example with BMW because BMW has BMW Finance or BMW Financial Services. So you go to the dealership, you pick the car that you want, and you know they give you an installment. So you still go through the whole process where they check your credit rating, your affordability, because obviously they're not going to give you the car if you don't afford the car. Okay. So the terms with the lease or you know those in-house financing is that they will say you'll drive the car for 3 years. It cannot go above a certain mileage. So they'll say that okay, you'll drive this car for 3 years. You cannot drive. It cannot go above 80,000 kilometers, for an example. And once it goes above 80,000 kilometers, then you've kind of broken the terms of their agreement because you need to bring it back to the dealership and then you can take another car. So sometimes you see people changing cars every 3 years and you think, hey, this person has money. No, it's those lease options, guys, where you drive the car for 3 years. It cannot go above a certain mileage. It cannot have scratches. It cannot have, you know, for someone like me, I don't think that option would work because I drive a lot. I think I would kill at 80,000 kilometers within a year. By the time we get to that 3 years, BMW will just be like, hey, you've broken all the terms of this contract, so you need to finish paying off this car. And the advantage with that is that, I mean, every 3 years you get a new car. But the disadvantage is that you don't actually own the car at the end of the term because you need to take it back to the dealership, right? So if you want to own the car, you do have that option, but then you sort of have to refinance it because remember you were paying a lease installment, or you were paying a car installment. I mean, because you have to go through all those credit ratings, but then you are leasing the car basically, and for them to give you that guaranteed buyback value, you know, it's like a bargain when you look at it. But then it also depends on your lifestyle, you know, how you travel to work. That option I think would work for someone who goes to work and back because 80,000 kilometers in 3 years, I don't think I can do it. Anyway, so you need to look at that because even when you go and finance a car, they will give you that option to say, okay, you have an option to lease the car and then after 3 years you can finance it back, or you can go the traditional way where you know you go through all the major banks and you get the best rate, and then at the end of the term you own your car. So those are the two options, guys. I know there's also like rent to own options. I'll do a different video on those ones because yeah, I need to do a little bit of research on those rent to own options. So once I've done my research, I'll come back and give you the tea, guys. So I'll leave it here for now. Don't forget to like and subscribe to the channel. Follow us on Instagram. It's The Modern Financial Advisor. Tell your friends to tell their friends to tell their friends to subscribe. And if you like the video, do drop a thumbs up. I'll leave it here for now. It's goodbye. Mwah.